Hello everyone. So in this video, I'm going to talk about I'm going to give you a detailed analysis of NTPC Green Energy Limited IPO. So it's a significant step towards India's renewable energy growth story. So we will be getting into the details. If you see renewable energy is taking center stage globally, this IPO is actually presenting you a lot of opportunity. It's a unique opportunity to invest in a company that's not only ambitious, but also plays critical role in shaping India's energy future. So let's break it down. And in this session, we'll try to explore NTPC Green Energy's business model. I'll talk about that. And we'll also look at the revenue streams, how they generate revenue. And also, we will look at the financial health of the company and the risk associated with this investment and the industry outlook overall. Also, we'll try to compare it with the peer groups as well. And by the end of this analysis, you will have a very clear insights whether you need to decide to bring this also into your investment plans, or this IPO aligns with your investment model or plan. So let's get started now, guys. Before we get in, one thing which I want to tell you is renewable energy is actually the future, because there is a climate change negotiations which is going on across the world, and India also have a lot of commitments upon its emission reduction, right? And reducing pollution, and all these commitments are there. So this recent conference of parties also talking about the same, and India and China are forced to reduce the emission reduction. Otherwise, the a trade tariff barriers will be imposed on these countries by UK, US, and other developed countries. So this discussion is there, and a lot of protest is also there from countries like China, India, the basic nations, Brazil, South Africa, India, China, etc. So one thing is sure, that renewable energy is the future. We need to reduce the emission reduction. And whether the developed countries are going to give you the technology transfer or fund the projects or anything, that's a different matter. But emission reduction, and for that, the best way to do that is actually renewable energy sources. So that's something which is very important. So keeping that in mind, we will continue this discussion. So let's try to understand the company's overview. NTPC Green Energy Limited. It's established in April 2022. It's wholly owned subsidiary of NTPC Limited. That's India's largest power producer. So this company is actually now focusing on renewable energy, and the company undertakes projects both through organic and inorganic routes. Now, unlike an engineering firm that primarily execute the projects, if you see NTPC Green, it generate revenue by establishing long-term power purchase agreements. So that is what you call as PPA. So from here onwards, I'll be talking about PPA. Now here, the establishing this kind of agreements with distribution companies, discoms. Okay, so for example, if you see, there are they have tied up with the Telangana Discom for another 25 years to supply solar energy at a predetermined tariff, and this project span across multiple states, different states. They have signed such kind of contracts like Uttar Pradesh, Gujarat, and more. One issue is there that I'll discuss later. The bidding rate has actually come down, that they are not winning much as compared to before. But they have a long-term contract with Telangana, which again, comes around 50% of their total. So we will be getting into all these. Now, let's look at the revenue stream. See, company generate 90% of its revenue from solar energy. So they are focusing more on solar energy. What are the renewable sources of energy? Mainly solar and wind, and rest of rest of the 10, out of which around 4 to 5 is from wind, and rest is around 5%. So 90% is solar energy. Now, NTPC Green's focus on solar energy is clearly relevant at this point of time, and it is evident from this 90% revenue stream model also. So it have made substantial investment in setting up solar panels, acquiring the land, and managing the execution through EPC contractors. So here the catch is, the issue is that you need huge amount of land and solar panels. See, guys, this is actually a very good business model that you can also try to adopt, but you need capital. If you have land, you can also establish solar panels, and this is a business model that I'm also trying to do. So I've started also this one. So when you have the land, let's say you have 6 acres, or even with 1 acre also you can start. So I have 6 acres and I have installed the solar panels, and what will happen is you can sell the energy generated from that. Okay, so you will be able to make around 30-35% return also with that, out of return on investment. Okay, anyway, and that's a long-term thing also. So see, once operational, the energy generated from this is actually sold to Telangana Discoms, and that is how you are actually getting the revenue. So that's the revenue stream model. So what I told you is, if you have fund, you can also, and land, you can also try doing this. That's the alternate option. And in case if you need any help in that, you can get in touch with me, because I'm doing it actually now. India's energy consumption is on upward trajectory. Of course, there are a lot of government initiatives which is supporting, and renewable energy also it is getting supported. So if you see, there are policies like Sahaj Bijli Har Ghar Yojana. I don't know how to pronounce exactly in Hindi, and then Green Energy Corridor and PLI schemes. If you see Green Energy Corridor, that itself was telling you that's about renewable source of energy and other things. So with these policies in place, the demand for renewable energy is set to grow exponentially. So there is no question about demand for renewable energy. See, guys, we need to think about demand and supply. When you invest on something, the question is whether we will have demand in the future. But here, when it comes to renewable energy, there is no question about demand in future. As much as you produce, there are requirement for that. It will be taken. So the question is about the supply. So supply is less here. So demand, there is no question, and there is no doubt. In future also, demand will be there, because renewable energy is the future. So for instance, if you see renewable purchase obligation, actually that RPO that mandates discoms to source a specific percentage of their energy from renewable sources. So that kind of obligation also there for the discoms. They need to procure certain percentage from renewable sources. So if you see Telangana Discoms, they are taking for another 25 years from here only. So again, wind energy's RPO is projected to rise from 0.67 to 3.48. That is also indicating a strong path, and strong growth potential for the industry. So RPO means renewable purchase obligation. If you look at the financial performance, see, NTPC Green Energy Financial actually exhibit impressive growth. If you see the revenue, it have grown, 46.82 CAGR. But there is a potential risk of PAT showing a remarkable 90.75 percentage. But still, the risk is, PAT's underperformance is there, because it is less than the expectation. Though PAT is showing a remarkable CAGR of 90.75, it is less than the expectation, because September 2023 PAT is around 2,000 million and was expected to double to 4,000 million, but it's around 3,447 million. So that is less than the expectation, and that is due to the seasonal and operational challenges, because see, it affects the climate and everything, right? Solar and wind. So it depends on rainy and other seasons, summer. So it depends on, it is actually seasonal, and also there are operational challenges also. So it depends upon that. Anyway, it will vary. Now, if you see, NTPC actually have long-term contracts, 25 years and all. 47% of its revenue, as I told you before, almost 50% is coming from Telangana Discom. But the risk is mitigated by 25-year lock-in period, because you have done all these investment, and that is going to take a lot of investment. So you can say that risk is mitigated, because 25-year lock-in period contract is there, and you are selling it at a fixed rate also. So the more concerning risk is that declining in percentage bid one. This also I've mentioned in the beginning itself, that initially it was 53% of bids they used to win, but now it is reduced to 22.6. That is signaling a potential challenge in securing new projects. So they are not getting that new projects. But 25-year lock-in period with Telangana Discom is actually good. Now let's look at the IPO details. So if you see IPO size, it's around 10,000 crores entirely through the fresh issue only. And if you see the use of proceeds, 7,500 crore. Use of proceed means what they're going to use. So 7,500 crore out of this will go towards loan repayment. Now, what is the advantage for this? If you repay the loan, see, now if you see the profit, from the profit, it will go to interest payment also. Or from revenue, when you calculate the cost, expenditures, interest payment will go to the expenditure. And then finally, when it comes to the profit, it will be less. But now that loan repayment is done, so interest payment cost will not be there. So what will happen? The profit and profitability will go up. That's the advantage here. Price band is around 102 to 108. And opening on 19th of November. Closing date is on 22nd November. Okay. Now, if you compare it with the peer like Adani Green Energy and Renew Energy Global PLC, NTPC Green's revenue and operating metrics are relatively modest. If you compare to this industry leaders, of course, it will be like that only. It's a new company, but its PE ratio, that is 148, which is competitive, and but it falls short in scale and efficiency compared to its peer. Okay, so that's something which I want to discuss. And if you see, I told you renewable energy is the future. So if you are looking for IPO and the listing gains, market is also falling, so we cannot say anything. So whenever market is falling, chances are very less that you will make that initial week listing gain at this point of time, like what you have seen in other cases. So don't get tempted. It's 50-50 chance only. So if you're looking for that initial listing gain in the first week, see, there are SEBI reports that we have discussed in the previous session also, that 54% of those who are buying IPOs or applying for IPOs and getting that, they will be selling it in the first week itself, looking for that listing gain. 54%, 46% is holding, maybe for 1 year, 2 year. But I told you, renewable energy is the future. I told you the India's obligations with the global scenarios also. So renewable energy is the future, and there is no question about demand here. Okay, so if you have planned for long term, this can be an option for you. Okay, because renewable energy is the future, there is no question of demand, and everything else is also looking good. So it's an opportunity. But if you're looking for that listing gain, nothing can be guaranteed. Okay, it's again a 50-50 chance. Even if listing gain will be there, it will be like, if you see the average, okay, when market is falling and then IPO, even if it is in profit, the average is 5%. So now the question is it worth it? 50-50 is the chance to win and lose. So 5% is what you're getting. When the market is up and listing gain is there, means it's around average. We have seen 25 to 30% is there. But when market is falling at this situation, that is a risk. So I never recommend you for, if you're looking for that listing gain or that 1 week move. If you're looking for long term, it's my understanding, my analysis. So this is actually a good option. So it's an opportunity because India's renewable energy is going to make a revolution, and it could be a very good opportunity. So there is a strong growth potential, but the risk I've told you already. It's concentrated revenue, and the bidding performance is also less. So now you need to analyze, understand the fundamentals, understand the demand supply equation, understand our global commitments. We have strong global commitments, and any supply won't actually be sufficient to fulfill that global commitments actually. So, and we will try to fulfill those commitments because of imposition of trade barriers. Okay, so that will reduce the forex and other things. So here we will try to fulfill that. So let's see, guys, and I have conveyed my analysis and understanding. So rest is up to you. Not for short term, not for listing gains. If you're looking for long term, renewable energy have a very good future, and you can get into that part of India's renewable energy revolution. So that's it, guys, and thank you so much for watching. See you in the next video.